Coming up in today's show, a report claims that a chain of monopolistic suppliers are overcharging for products on China's high-speed trains. We'll take a look at expected changes to China's movie industry now that more US blockbusters can enter domestic theatres. Foreign distributors can now take a bigger share of box office receipts. In a country where the increasingly aged population is expected to cause significant issues, we'll take a closer look into China's emerging senior care industry. And we'll talk with Patrick Chovanec of Tsinghua University on the economic news and developments from China's annual congressional sessions. Hello and welcome to China Biz. I'm Mark Dry in Beijing, bringing you all the latest insights on the Chinese market. Before we get to our feature story, let's take a quick look back at this week's business news.
Chinese Premier Wen Jiabao has lowered China's growth targets for the year to 7.5%, down from the long-held target of 8%. Wen announced the figure at the National People's Congress, where he said the country will encourage more consumption, address the growing wealth gap, and wean the economy off its present dependence on exports and government-backed infrastructure. Wen also said China will continue its property tightening measures. Two of China's largest online video portals are to merge, taking up more than a third of the market share. Youku announced it will buy its smaller rival Tudou in a $1 billion all-stock deal. Players in the industry compete for the 450 million internet users in China. The US, EU, and Japan have filed a formal complaint to the World Trade Organization against China's restriction of rare earth metal exports. The complaint accuses China of keeping rare earth prices low, giving domestic firms an unfair advantage, and forcing foreign firms to move their operations to the country. The Chinese government has denied the allegations. Rare earth metals are used in advanced technologies including cell phones, wind turbines, and cameras. Japan says it will buy 65 billion yuan or $10.3 billion of Chinese government debt in another step towards internationalizing the yuan. Japan's purchase is the largest ever in the Chinese currency. China and Japan have recently been focusing on diversifying its foreign exchange reserves. And lastly, property consultancy Knight Frank announced that Hong Kong's Central has overtaken the West End in London as the location with the highest monthly office rents in the world. Prime office space in Central was leased out at almost $135 per square meter a month in the fourth quarter of last year. Two other Chinese cities were on the top 50 list, including Beijing at number 19 and Shanghai at 28.
China's bullet train ambitions have once again been derailed. News surfaced this week that an unopened section of the high-speed rail line in central China had collapsed following heavy rain just 2 months before it was due to open operations and after it had already undergone tests. But the economics of China's trains have also come under the spotlight. As Steffi Chung reports, attention has been focused on the expensive price tags fixed onto common train parts, all enabled by monopolistic suppliers.
It's been anything but a smooth ride for China's bullet trains. Once a great source of national pride, the country's high-speed rail network has been mired in controversy. Several key events include the sacking of top railway officials on graft allegations, a deadly train wreck near Wenzhou last year, serious funding shortages and halted railway projects, all of which have led to eroding public confidence over quality and safety. China's railways have also tracked up a 2.2 trillion yuan or $350 billion tab. And while more obvious factors like high operating costs and lackluster ticket sales have contributed to this staggering debt, there's also been a smellier culprit. Caixin came across a procurement catalog that listed vendor names and prices for over 3,000 bullet train components, parts that were purchased by the country's largest maker of rail vehicles, China South Locomotive and Rolling Stock Corporation, or CSR. Century Weekly magazine's expose on the issue revealed some of the extraordinary prices levied for very ordinary restroom amenities. A toilet bought for 95,000 yuan or $15,000. A soap dispenser bought for 4,300 yuan or $680. Insiders say those prices allowed railcar suppliers to earn some of the industry's biggest profits. At Beijing South train station, this passenger guessed that a sink top in one of the cars would run for around 3,000 yuan or $470. Not a bad guess, considering that Beijing retailers sell sink countertops at 3,000 yuan per meter. But the catalog's listing price of a 2-meter sink countertop is more than 4 times the retail price. Railway expert and professor of economics at Beijing Jiaotong University, Zhao Jin, says these steep fees are the result of monopolistic suppliers.
But because the Ministry of Railway has a monopoly power, for this very small parts in the bullet train, they will give some benefit to some small suppliers.
And costs aren't immediately felt by passengers.
Yeah, of course, this will increase the ticket price, but it's too small, I think. Yeah.
It's worth it. If the sink countertop costs 26,000 yuan, the train ticket is fairly well priced.
But train manufacturers used to competing with 2 or 3 companies to supply products aren't so amused. Seat suppliers across China, for example, began jockeying for contracts soon after the Railway Ministry announced its plans to build a nationwide high-speed network. One company official, whose factory competed for business, told Caixin that the Rail Ministry had estimated a 400 billion yuan, or $63 billion market, for seats to fill 1,000 high-speed trains. But sources complained that ministry officials awarded deals to new, well-connected companies, rather than to existing firms. Shanghai Tenda dominates the seat market for bullet trains, charging 3 times the price set by other manufacturers. In the same year the company was registered, it beat out 2 more established companies during the initial round of bidding. This aroused suspicion that the company was set up just to produce seats for high-speed trains. But for Shanghai Tenda, everything was rosy, with profits more than tripling between 2007 and 2009. The company's sole shareholder, Ho Jingliang, is also the legal representative for a company owned by Ding Xumiao, a businesswoman who won bullet train contracts and was connected to the former rail minister Liu Zijun. Both Ding and Liu were arrested last year on corruption charges. With mounting public pressures and a looming 2.2 trillion yuan debt, the Ministry of Railways says there will be cutbacks. To start, a proposed annual 10% cost reduction target aimed at the manufacturing of bullet trains. But industry experts question the feasibility of this goal, given the country's rails have been notoriously tied up with monopolistic practices.
You can read a longer version of the story on our English website. And since the report was published, CSR has denied Century Weekly's claims. Now, over the years, American blockbusters like Titanic, Avatar and 2 Kung Fu Panda movies have cleaned up at the box office in China, just as they did elsewhere. But this doesn't mean it's easy for Hollywood in China. That's mostly because China has only allowed 20 foreign movies into its theatres each year. But that's set to change thanks to an agreement signed by the 2 countries during Vice President Xi Jinping's recent visit to Hollywood. China has agreed to allow more Hollywood films to reach its moviegoers. The country's film administration will allow an additional 14 3D, IMAX or other enhanced format American films to screen in theatres every year. The ordinary version of the films will also be in China's theatres. These films will not be part of the current import quota of 20. Film expert Tang Jimeng says the emphasis on enhanced formats is about profits.
3D format films and also IMAX films are very much in terms of the profitable films. They are actually the most profitable ones that help not just the film authorities, but also in terms of the movie theater chain operators. They benefit so much from these 3D films and IMAX films because they make money. It is the point for growth in terms of their revenue.
The deal will make China an even bigger magnet for American movie giants such as Walt Disney and Warner Brothers. Total box office revenue in China reached $2.1 billion last year. That number is expected to reach $5 billion by 2015. The new agreement will also give foreign film studios a bigger slice of box office receipts from their imported films, 25% of total revenue, up from the current 13%. Tang Jimeng says the move could make things tougher for local players.
This is why many of these smaller theater chains in the 2nd tier and 3rd tier cities are kind of worrying about, because they don't have IMAX theaters. Their movie theaters are not equipped with IMAX kind of surroundings, and so in this case, the box revenue will be impacted by this influx of the kind of 3D films.
Almost half of China's box office revenue last year came from foreign movies. That share is expected to grow as ticket prices for enhanced format films are more expensive than for regular formats.